I've been invested with InvestEngine now for about 2 months, and I thought it would be right to stop and have a look and see how a managed portfolio is working out for me. I'm going to compare it to the various global indices to see how it compares over this very short time frame, see how it would have done against just investing in those indexes. I'm just going to talk a little bit about where InvestEngine is going, how they are improving the assets available on the platform, so make sure you stick right to the end, as I've also got some news on the extension of their sign-up offer that you won't want to miss. Stay tuned. So I'm David from prettypenny.club. I make videos to help you reach your financial goals with content on investing, frugal living, passive income, generally trying to make your money work harder for you. So investing is all about making money. Let's not make any bones about that. Any investment that we make, we want to see that investment coming to fruition, turning a profit and making us some money. Probably more than any other asset, stocks, whether it be buying, holding, selling, trading, whatever you want to call it, is all about making money. The crypto gang will tell you that they believe in a project and they believe in the vision, and they might well do. If you invest in property, you might get attached to that physical building or a piece of land. But when you come to invest in stocks and shares, most retail investors will never see a share certificate. It feels very impersonal, at least to me. And so, more than anything else, investing in the stock market, for me, is all about making money. So I think in the main, long-term investors would at least agree that by and large the stock market will generally go up over a long period of time. So the longer you hold quality stocks or index funds, you could assume that they are going to rise in value over a long period of time. So stock markets move on a day-to-day basis, whether that be in a particular sector or over a geographical area. Perhaps something fundamental has changed in what you're investing in and you need to start to rethink bits of your strategy. So the tricky part is managing all this. The tricky part is knowing when you should be making these moves, or at least giving yourself the right information to make these kinds of moves. It's what will separate amazing gains from potentially disastrous losses. I think probably you've heard me talk about investing in index trackers as being the most straightforward thing to do when you're investing, and that is exactly a good strategy if you want to track the market. You'll never beat it. You'll always be ever so slightly below the market rate, in fact, but you're going to have a nice steady performance and it's easy to understand what's going on. A managed portfolio is going to be somebody who is trying to beat the market. Perhaps not in any particular dramatic way, but they are going to be taking an active hands-on approach to how they're looking after your money. InvestEngine are one such managed portfolio that I have been trying lately. While I have enjoyed the look and the feel, ultimately the only thing that really matters is how much money it's making. So very quickly, I'm not going to go into how InvestEngine come up with their managed portfolios. I have another video about the sign up process and portfolios and all that sort of stuff, but suffice to say they take a very diversified approach with a range of ETFs available from various providers. With that in mind, let's see how my InvestEngine portfolio has been stacking up these past couple of months. So here is my graph from the 21st of July through to the 26th of September, and it represents a 1.3% increase in that time frame. This portfolio is invested in a diverse range of assets. There are some familiar candidates in there, things like the S&P 500, the FTSE 100, NASDAQ, emerging markets, global small caps, but I am quite happy to admit there are a couple in there that I was not really familiar with at all, one of which is the Wisdom Tree AI ETF, and you'll see it's all to do with companies in the AI space. It's a really interesting area, I'm sure we'll all agree. I hadn't heard of any of these companies, I'll be absolutely honest with that, and I'm really just hoping it's not the beginning of Skynet. Anyway, after that quick tangent, overall my portfolio, as I say, has earned me 1.3% in this period. So let's see what the other various popular indices standing alone would have earned me in that same time frame. First of all, the FTSE 100. Of course, this is one such tracker that is included in my portfolio, but specifically for the FTSE 100, for the same period of the 21st of July to the 26th of September, the FTSE 100 went from about 6,998 points to 7,051. This represents a rise of about 0.76%. The FTSE 100 itself is a popular index to track, composed of the top 100 companies listed on the London Stock Exchange, and a rise of 0.76% isn't to be sniffed at, but interesting that this particular managed portfolio is beating the FTSE 100 over this very short time frame. So let's have a look at the S&P 500. It's another in my managed portfolio. It's the 500 largest companies listed in the US. So for the same time period, it moved from 4,358 points to 4,455. This represents an increase of around about 2.23%. So this time when looking at the performance of my managed portfolio with InvestEngine, you can see that it has underperformed the S&P 500 at this same point in time. So finally, how about looking at an all-world index? I've talked about in the past how an all-world index might well be the only investment you ever need to make. So let's see how my portfolio has paired up against the Vanguard FTSE All World. So this particular ETF went from about £86.44 to £87.51, representing an increase of about 1.23%. In this instance, I suspect that the stocks based in the emerging markets has probably dragged this down a little bit with what's going on at the moment, but still, it's interesting that InvestEngine, for this particular portfolio at least, and for this very short time frame, is in front of an all-world tracker. By the way, I got all these figures from uk.investing.com. You can search for any ticker and view the historical data. It's pretty cool, and I worked out the percentages with the Omni calculator. I'll leave links for these down below. They're both pretty good sites I go back to time and time again, so check them out if you're interested. Don't forget, if you're enjoying this video or you're finding any value in it, don't forget to leave a wee dab on that like button. Cheers. Anyway, as a brief summary of that data, it just goes to show there is no perfect solution to investing. The nature of global markets are such that they will go up and down based on all manner of different factors. If the S&P 500 had a particularly tough month, then it's quite likely that a more well-diversified portfolio is going to do better. And while the S&P 500 is quite diverse in the sense that it has 500 companies, it is very concentrated around one geographic area. And because it's weighted, you'll find that things like Microsoft, Facebook, Google, Apple, those guys make up the large portion of this index, so it may not be as diversified as it first looks. In the same way, looking at those charts, if the FTSE 100 suddenly had a flyer for whatever reason, then it will probably outperform this InvestEngine portfolio for a given period of time. But what I do like about this portfolio that I'm investing in at the minute is that it appears to be hitting something around the middle ground. The more diversified you are, the less likely you are to be impacted by spikes or dips in particular areas of your investing, and for me that's good news. But listen, 2 months, it's barely a blip in what I would consider a proper investing time frame, which I would think is an absolute minimum of 5 years. But really, as long as you could make it. 2 months is really hardly worth talking about at all, but since this was a brand new account, I thought all you nice people might be even just a little bit interested in something of an update. So of course it is a managed portfolio, and over the past couple of months I have received email notifications from InvestEngine about rebalancing that has been going on in my portfolio. This managed portfolio has someone or something deciding when to reallocate resources to various parts of my investments. Buying, selling, moving around, it's all happening. My money is being looked after by someone else, and someone else is making decisions on what to do with it. Often this is a good thing because when we try to manage our own money, we become emotionally attached. We're much more likely to make emotional decisions rather than necessarily the financially correct ones. And so I'm comfortable enough with this. I would say that these rebalancing acts aren't some random exercise dreamt up by some crazy dude in a lab coat. These changes are being made on my behalf based on my level of risk tolerance, my investing goals, time frame that I'm investing, and so on. And of course I can change the script at any time I choose or pull the plug entirely if I want to. Being regulated by the FCA and being part of the FSCS is important to me as an investor, and InvestEngine obviously have this in their locker. So some of the comments I got from previous videos when I've talked about InvestEngine, or indeed on social media when I've been talking about it, is that there just aren't enough ETFs and assets to choose from. InvestEngine have been adding more and more to the platform as the weeks go by, and they're really boosting what's on offer to investors. Again, they've been pretty good in keeping me up to date about what's being added to the platform. Whether this is enough right now to entice people to the platform remains to be seen. I think there's lots and lots of people that are keen to invest in individual stocks, and they just can't do that with InvestEngine at the moment. But I think what people want, certainly what I want more than anything, are low fees and plenty of choice. In terms of fees, I've found that InvestEngine are probably pretty bang on the money. You can manage your own portfolio entirely free of charge, and there are no extra charges on the platform for that. Of course, I've chosen a managed portfolio for my particular adventures in InvestEngine, so right now that fee of 0.25% is looking pretty good. I think I'm getting a fairly good service for that. And you know, just because something has fees, it doesn't necessarily make it bad. You need to decide for yourself if the fees are worth it. You compare it to something like Vanguard's Life Strategy, you know, there are fees involved in that. There's fees involved in pretty much everything. I think 0.25% at the moment is a pretty good rate to be paying. In terms of choice, striking that right balance on what is offered is often a tricky subject. On one hand, if you don't offer enough, then the platform maybe begins to look weak or under-featured, and rightly or wrongly, maybe doesn't look very attractive. It might look a little bit bare. Folks are thinking about using it or left wondering, well, what's the point? I can get all these things somewhere else. The other side, of course, then is if you offer too much, then investors get lost in options. Analysis paralysis, if you like, starts to set in. It can become confusing as to what investments you should be putting your hard-earned money into. It can lead maybe investors hopping from one asset to another, chasing the big returns, and probably often getting burned in the process. But so far in my 2 months, what I've seen from InvestEngine is that they are keeping the core message very, very simple. Invest in a diversified portfolio of ETFs and index trackers, and I think they're getting the balance right, certainly for my needs right now. So look, the whole point of this video, 2 months in, I think a 1.3% is a half decent return for the time period given. As I say, 2 months isn't really an awful lot of time, but I'm happy with what I'm getting and what I'm getting from the service from InvestEngine. So look, the good news I promised you earlier in the video is that InvestEngine are extending their sign-up offer through to the end of the year. So that means if you thought you might miss out, then you are in luck. Their current offer is to sign up and get £50 free when you invest £100 for 12 months. You can also add another £25 to your account when you add a friend, so you can start to think about building up a nice little pot for yourself as you refer your friends. I think you can refer up to 5. The whole process is easy to follow. The whole sign up journey is straightforward. I'll link to the videos where I've covered that down below. It's worth mentioning once again, there's no like deposit fees or transaction fees. It'd make it very easy to start investing with even small amounts of money. So if you are a small investor just getting started, it's good to know that your money isn't going to be eroded away by crazy costs or nonsense management fees. You don't even have to pay any fees if you don't want to. So look, comments are open. You can contact me on Twitter and Instagram. If you have any questions, just let me know. Thank you very much for watching. I will see you in the next one.